We have to talk about ETFs. Of course, right now we do have a relief rally for the major averages, but on the week, we're looking at the worst week since March. Concerns around rising rates, trade tensions, maybe too far, too fast. How have you seen this through ETFs, the lens of ETF?
Yeah, so when you look at ETFs in times of volatility, we tend to look at like turnover or dollar volume. ETFs on average the last 3 days have traded over $180 billion a day.
Wow.
So that's significant, but we expect it in times of volatility like this. Now, the average is roughly around 80 billion a day, so it's more than triple the average. But again, when you look at this historically in context, it's not that big of a deal.
And I think
again,
we have a terminal that shows this.
Yeah, so
into context.
Yeah, generally we'll like to look at SPY, which is the largest ETF, most liquid. Traders tend to use it. It's a fear gauge. If the volume really spikes, we know that people are scared of things and they're trying to get in or out of the market. But in reality, this isn't that big of a deal. Well, it is a big deal, more like a Category 4 hurricane versus 5. But when you look at it versus Brexit and versus Volmageddon back in February, or even back during the flash crash in 2015, it's not even anywhere on that radar.
So before talking about bond ETFs, because that's another big piece of this volatility, of course, one question is, what role do ETFs in terms of the liquidity do they have in this sort of a sell-off? Whereas, 20 years ago, you'd have to actually sell individual shares, but now you can just unload a bunch of SPY. What was the role of that liquidity, do you think, in the recent volatility? Yeah,
so basically what happens is you get diversified broad beta exposure, and in times of market, correlations go up. So you can trade these ETFs and get in and out. The one thing to talk about here is that we only saw 8 billion in outflows in ETFs over this time, so most of the trading actually happened on exchange, and this is normal. 90% of the trading that we see in ETFs is actually just people trading shares back and forth, and not so much that creation, redemption, or accessing the underlying market. More
volatility to come based on what you're seeing with ETF flows?
I guess time will tell, but ETFs, anytime there is volatility, flows tend to increase as well afterwards and during.